Hi folks, this is Lee with the Market Sense for the week of February 11th, 2020. The charts in this presentation are provided to us by Gettess and come from their Trade Navigator software. And this is our vaunted weekly bond market chart, and this is beginning to look like what I suggested might be the case a few weeks ago. It looks like maybe they've come out of this sideways pattern and made an attempt to test these highs. And if they turn back down from here, this may mean we've basically seen the highs in the bond market. The first thing to watch for, well, we were looking for them to get up to 164.08 this week, and they have turned down without even making any attempt to go higher. Doesn't mean they can't turn back up there, but they sure look like they're heading down. And the first area to look for here is 161.18.19 right here at this middle moving average. If they can hold there, then maybe they're still okay, and maybe they'll be heading back up to 64.08. But I'm not sure they can hold here. And if they don't, the next target is down here around the 159.16 area. And it is good support. I'm not sure that can hold either, but that'll be the interesting thing if they hold either of these supports. And we have a couple of things. The coronavirus, of course, is an issue. Not that it really impacts the markets, but if there's enough fear about it, people try to pile into stuff where they feel safe, and U.S. debt instruments are about as safe as you can get. So they tend to buy bonds if there's fear. And the other thing is we got a Fed chairman testifying in front of Congress both Tuesday and Wednesday this week. I don't really think anything major will come out of that, but, he might slip up and say something he doesn't mean to say, so we always got to watch for that. But at this point, those two areas, the 61.18.19 and 59.16, those are the two interesting areas to watch to see if they can hold support at either of those two. And I don't think either of them are guaranteed to hold, but that's the cool thing to watch. Stocks, well, gosh, we got this breakdown here a couple of weeks ago that is more significant than anything we've seen in quite a while. Didn't stop a thing. They just turned right back up from that exhaustion bar low and blew through all kinds of resistance and went to new highs again. It's not real clear from looking at this chart, but that close actually is above that moving average of the highs. So, here we are again. Strong bullish trend. Don't do anything to step in front of them, and they have gone to new highs again this week. Now, seeing this amount of weakness from a couple weeks ago and seeing the momentum indicator, say that 3 times fast, is turned down so hard and not go back above, does make me a little gun shy about this. I mean, I won't be shocked if they turn down from here, but I won't be selling them either. It's just not a good thing to do when a market's making new all-time highs. The target up here is around 33.80, and notice I didn't call it resistance, just a target. The best support to buy would have been 32.83.85 area down here at this moving average, but they haven't shown any indication of going down there. And if they were to go down there now, I wouldn't be as enamored with it. Doesn't look like a good buy to me. But I will say this, if there is fear of the coronavirus, and I still think that's kind of weird that would be a major impact to markets, but if there's any fear, this market certainly is shrugging it off with no problem. So, we're in the same ballpark we've been in a while. If you get a chance to buy them, great. If you don't, well, don't step in front of them. It's going to be really hard to make money selling this market. So that's what we've got for you today. I hope you can find something profitable to get yourself